Thanks, everyone. I was sitting there speaking, not realizing we hadn't started the broadcast. I'm Jim Carroll. Thank you very much for joining, and we'll begin our presentation on our intercompany module. My understanding is we're going to run through about 5 minutes of slides, and then we'll get right into the product, and then we'll take questions afterwards. The questions come in the fashion of Q&A via the internal GoToMeeting webinar chat. So let me get rid of my mug here. See you, there we go. And we shall begin. So Advanced Solutions, we develop products for Acumatica. We divide them into two industries. Today, we're going to be focusing on our finance area and specifically in the area of inter-tenant and intercompany accounting. We also have tools for especially lower cost manufacturing, but very feature rich. And we complement with in the distribution area, tools that compete against Soligo and the like for integrating ShipStation and third-party warehouse products. Regarding our philosophy, typically we always augment core Acumatica, so our products are written in core Acumatica XRP. Oftentimes we take on difficult challenges, and then we provide advantage by selling into markets that aren't currently available. And that speaks to our inter-tenant intercompany accounting module. Here we're essentially filling the gap within the Acumatica offering. So if you look at Acumatica today, over the course of the last decade or so, they have Acumatica's added value in terms of its intercompany capabilities, and the intercompany offered by Acumatica is based on a single tenant philosophy where one is able to have multiple companies under a tenant, each company having different base currencies. In this example, company A on US dollars, company B on Canadian, etc. And intercompany kind of nets into two different functions. One is the auto disbursement or allocation of payments. So let's say companies A through F all have the Acumatica license. It's $50,000 a year, so they allocate $10,000 of payments to it. Company A pays the 50 large, but then auto allocates to B, C, D, and E their 10,000 share. That's option one or scenario one. Scenario two is where we are buying and selling items or inventory. So in this case, company A needs product from company B to satisfy a requirement. And in this case, it's really our scenario number three as an example. So my UK company buys product from my US company and then sells it in the UK. And our product provides for those features. Whereas Acumatica is in a single tenant environment, we support multi-tenant environments. So in this case, tenant one has three companies with US, Canadian, and UK dollars as base currencies. Tenant two is doing Euro and UK, and then there's a separate tenant three that does US. Again, both scenarios, one, dispersing expenses or payments across multiple companies is supported. But now, instead of being under a single tenant, we're doing it under multiple tenants. Likewise, we can buy and sell inventory among different companies associated with different tenants. Not only do we support the inter-tenant capability, but we also can support multi-instance capability. So in this case, you've actually got two different licenses from Acumatica, two different URLs, URL 1 and URL 2 in my example. And again, tenant 1 has got three companies under different base currencies. Instance 2, tenant 2, could be tenant 1 under instance 1, but made it simple, has a couple of companies. and we're still doing those basic functions of disbursements and inventory trade. Typically, you won't find this too much in the Acumatica world. Could be legal reasons, etc., or ownership reasons, severability that folks want different instances. This you'll find with the multiple tenant to be much more commonplace. Regardless, one point is that if you go with our tool, you don't need the Acumatica intercompany accounting module, because not only do we support inter-tenant capabilities and inter-instance capabilities, we support the base single tenant capability that Acumatica provides, and that's now a separate a module within the Acumatica offering, and we supersede that. So core functions, we support global financials. That is under a single tenant, you have a module that is required for payment, for having the different currencies as base currencies under your companies. We of course support currency management. I mentioned we supersede intercompany accounting. And by the way, if you have tenant one with one company, tenant two with one company, tenant three with one company, then you really don't need global financials, because in those scenarios, the single tenant with one company with one base currency can be applied. So if you're looking at situations where you've got two base currencies and companies want to interoperate, it might be a less expensive way to go with a two-tenant deployment. So that's the flow. We're now looking at going into a presentation. So I'm looking for my guy, Matt Butler. And let's see here, excuse me for a moment. Oh, great, Matt. So do you want to take over the sharing, Matt? I'll stop sharing, and if you can. Let's see here. So I'm going to stop sharing, which I've just done. And Matt is the author of this very robust product and the smarts behind the way it works. And so we'll now waiting to view your screen.
There, I think.
Bingo.
Hold on, I don't want to do that. Screen. All right, can you see my whole screen?
Yes.
Okay, great. Hello, my name's Matt. Our intercompany module is constructed a little like Acumatica geo-consolidation. So you have sites, you can see right now I'm referring to the same site, but everything runs via web services. So this could technically be a different instance, a completely different version of Acumatica if you wanted. So once you set up a site, then you would map, let's see, you would map a vendor or customer to different document types. So in this case, we have AAA Manufacturing, which is a vendor, mapped to Canada as a bartender school. So let's just do this. And we'll duplicate that. So we're going to pull up AAA Manufacturing. And on this side, I'm going to go to Company 2. Okay, so In this case, company A's vendor is company B's customer. And the mapping says, if I create an invoice in the United States for this vendor, go ahead and create an AP bill in company 2 for that corresponding customer. And so dropship POs can create sales orders, regular POs, as well as create payments if you want. And the key to the accounting really lies in the payment methods in these cases, where you would create a cash account that sort of represents the offset accounting. So, for example, like an interco payment method tied to an interco cash account, which isn't a real bank account. It's just the bar tab between the subsidiaries. So if I go in and I say, let's go ahead and make let's check. I'm just going to check what we got in here already. Oh boy. For the sake of not looking so cluttered, all right. Oh, okay, that'll be fine. All right, so I'm going to go ahead and create a purchase order for a manufacturer. Okay, and we're going to go ahead and just create the Acer computer. Okay, and let's see, we're going to do 5 of them. All right, so we look at this. We have purchase order 1725. Okay, it's not here yet. The moment we remove hold, I guess we have to approve it too. The moment we have an open PO, looks like it wants to make our payment too, but we're just going to focus on the creation of the sales order. So if I come over here into company 2, just to open up the sales orders. And there we go. All right, so we're on sales order number 6598. But when intercompany runs, we'll just go ahead and process this. And we'll refresh that. Sleepy, sleepy. Okay, 6599. You can see it's an ordered quantity of 5. So if I come back to my purchase order, and we'll just refresh this. Okay, so now I'm going to go ahead and ship part of this, and we'll just go ahead and create a shipment. But let's do a partial. So we're just going to ship 3. Okay. So I'm going to confirm this shipment. And if we look at intercompany now in company 2, intercompany transaction. Okay. Company 2, that would help. All right. So I have, it knows that 4202 needs to be communicated as a PO receipt because of a similar configuration here. It looks like this. Maybe not. We'll just duplicate that so you can see it over here too. And the same simple instructions. Okay, so a bartend knows that AA manufacturing is its corresponding, and it says that if I have a shipment, I should be creating a PO receipt on the other end. So what that means is if I process this, now let's just go back to my purchase order and do. Okay. All right, so we can see that the shipment 4202 resulted in a PO receipt for the 3, right? So now if I look at the details, I have 3 on receipt. I ordered 5. If I come back to my shipments and I look at my sales order, it's gone to back order because I only shipped 3 of them, but you can see that everything corresponds. And close that. And the queue clears out. So I'll stop for a moment. Does anyone have questions?
Looks really good, Matt.
You jinxed it all, Jim. The next thing I do is going to blow up. Okay, so there are different approaches to accounting when you do it this way. Like I said, most of the time, what we find is people don't even want to create the payments. They just let it sort of stack up, and then they make one big cash transfer between companies. But if we look at the vendor, let's just look at it can just be check. I mean, it doesn't have to be intercompany, but we can do that, and then do that, and save that. And then we go over to our customer, and we go to our payment methods. We grab interco. If we had made it. Okay, so we hadn't made it. Basically, we would create this as a interco cash account. That interco cash account corresponds to a GL account that rolls up. So on both sides, I would have the 19,999 account, and I would have positive. I would have a positive asset and a negative asset on the other side. So when you combine the two, they should theoretically zero themselves out unless you are charging premium between your subsidiaries. So quiet. Any questions? Well, okay, great.
Obviously, you can do currency conversions and that type of thing as well in terms of the interco going back and forth, Canadian and US dollars, that type of stuff, because you get that with Acumatica standard.
Correct.
So that's one question I know that comes up from time to time. And in terms of implementation, Matt, maybe speak to that. We've got just a couple more minutes before we know we're at 11:20. Usually we like to go to about 11:25 or so.
Sure. The really nice thing about the construct of all of this is is that it actually operates almost exclusively through web services. So if we just take a quick look, all of the interface screens are completely independent of any stock Acumatica pieces, and everything actually runs through web service endpoints. So when I talked about setting it up like GL consolidation, what you see is a mapping even to myself. So if I'm Canada, I'm sorry, if I'm the United States company and company 2 is Canada, all of the data communication is protected by the service contract. So the likelihood of changes to Acumatica causing any issues with the software through the upgrade path are actually very, very minimal. This has only had a couple of code changes since 2017 R1. So because of that, we're very confident in its longevity.
Thank you. So I guess I will.
I'm making you the presenter.
Go back and just give the best thing. So I want to thank you all for your attendance. Please, if you have any questions, we'll follow up with this video. And then at the end of the video, we provide our 800 number and email, etc., to get in contact with us. And we've got demo systems and data sheets and the all that is required to learn the product. So thank you very much for your attention. End the conversation.